What's happening in markets right now is very strange. Everything is going down together, and it's not supposed to. Stocks are having their worst year in a long time, but so are bonds. Stocks and bonds are supposed to be uncorrelated, meaning that they move up and down separately for the most part. And actually, bonds are supposed to offer your portfolio protection in times like these. That's why a traditional investment portfolio at least used to be something like 60% stocks and 40% bonds. But bonds are not offering that protection right now at all. Crypto is another asset class that has historically been relatively uncorrelated with the stock market. But lo and behold, it is now trading tick for tick with the stock market. So what is going on here? Well, it's something that I first started talking about last year, right around when the market peaked. Then we continued to talk about it this year. Once again, getting a little bit lucky with the timing of that particular video. And fortunately for us, the answer to that question also tells us when all of this might turn around, how we got here. To help me better understand how I can best explain this situation to you guys, I asked you an important question. When did you really start to get into personal finance, i.e. investing? About 80% of you said in the past 2 years. So for that 80% of you, I'm speaking to you now directly. I really hope that this current downturn has not discouraged you from learning more about personal finance or investing. I think it's so important that we take these kind of things in stride, that we stay the course, and that we take advantage of this as a learning opportunity. And that's exactly what we're going to do today by learning a little bit about macroeconomics, which means big picture stuff. Now, I know talking about economics can sound a little bit like a different language, but don't worry, I'm going to try and do my best to keep it as simple as possible. So, the past 20 years have been a very unique moment in history, a moment that will most likely not continue going forwards. What has happened in the past 20 years of our society is there has been a massive wealth boosting effect. What I mean by this is asset values, such as things like home values, stocks, have increased massively in value, particularly in the last few years. But a huge portion of the population does not own any assets. They don't own a home, they don't own stocks, they don't own anything like that. So they did not experience this wealth boosting effect. Only the top half of society did. This has led to a very wide wealth gap today. So that's the first part of our current predicament. Now, why did this happen? The easiest and most kind of overly simplified way to explain this is a simple relationship. Interest rates down, asset prices up. Okay, so remember this relationship because it's very important. You can kind of think about interest rates like the price of money. What can I borrow money for? How much will it cost me in interest? This is the price of money. If it's cheap, i.e. interest rates are low, then it means that I can borrow a lot of money easily and then do something like invest that money or use it for other productive purposes. A really easy way to illustrate this relationship is home values. If interest rates go down, home values typically rise. And that's because you can afford more home for the same mortgage payment. So to sum that up, if interest rates go down, asset values typically rise, and this creates a wealth boosting effect in society for whoever owns assets like homes or stocks. Now, here's the direction of interest rates for the past 20 plus years for your reference. Now, on top of this wealth gap between asset owners and non-asset owners, we have the second part of our predicament: soaring inflation, meaning the price of most everything you need to buy on a daily basis is going up. This is happening because too much money is chasing too few goods and services. And that's happening because low interest rates created too easy access to money at the exact same time that COVID caused massive supply shortages in our economy. So more money was made available and less goods and services was made available. This is basically a recipe for disaster when it comes to inflation. Now, this inflation affects everyone in society, but it affects the bottom half of people the most. The wage earners, the working class, the people who do not own assets. They are hurt very bad. That's because if somebody is living paycheck to paycheck and now gas or food is more expensive, they simply do not have the money to afford that, which basically forces them to go into debt. Like I said, hurt very badly. Okay, so let's recap these two parts of the predicament. Let's put it this way. Let's say over the past 20 years, you were an asset owner and I was not. So I basically just watched you get richer and richer and richer as your assets went up in value, and the whole time I was falling further and further behind. So I'm already in a bad spot relative to you. And now add to this that the price of things that I need to buy on a daily basis are much more expensive. So I'm way further behind now. Like, I am hurt a lot. This brings me to where we are now. There is a central planning entity in our economy called the central bank. And they are the ones who set the main interest rate in the economy. This is the interest rate that things like mortgage rates are based off. So remember, we're really drilling this home today. Interest rates down, asset prices up, generally. This is where the "don't fight the Fed" meme came from in the stock market over the past couple years. The Fed, aka the central bank, the Federal Reserve, created a massive tailwind for the stock market. So at least in part, the central bank contributed to this massive wealth boosting effect in society by allowing interest rates to drift lower over the past 20 plus years. But they've now come to the realization that the economy is out of balance. Shocking, I know. It's like somebody there finally looked at a chart and went, "Hey, have you guys seen this? The top half is rich, the bottom half is struggling, and inflation is making everything worse." So they have actually decided to do something about it, which is also kind of shocking. They're going to kill the economy. Now that might sound a bit dramatic, but that's actually kind of what's happening right now. Zoltan Pozsar, one of the most interesting macro minds in the world today, at least in my opinion, puts it really well in a recent article as per this tweet. The Fed is basically attempting a controlled demolition of asset values because now they are reversing everything. Instead of allowing interest rates to go lower, they're actually cranking them up. Way up and really fast, the fastest they've ever done it in the past 40 years. And in finance, the level of things matters a lot, but so too does the rate of change. And this speed at which they're increasing rates is, again, it's very, very fast. So as a result, what do you think asset values are doing? Remember that relationship. Interest rates down, asset values up. So if interest rates rapidly go up instead, then yep, look out below. Stock market tanking, bonds are tanking, crypto tanking, and the housing market is actually finally showing some signs of slowing down. In summary, the central bank is basically saying, hey, wealthy asset owners who've seen your wealth increase dramatically over the past couple years in particular, we're going to hurt you a little bit. But don't worry, you'll still probably be rich, but we're just gonna, kind of take you down just a little bit. And that's going to help us out with this inflation problem here, because this other part of society, yeah, they're having a really hard time. So this will slow down the economy, possibly cause a recession, with the goal of bringing inflation down. But why will bringing down asset values slow the economy and potentially solve the inflation problem we have? Well, the highest level of demand in our economy comes from the most wealthy because they spend the most amount of money. So if you hurt their wealth a bit, they'll spend less money, the economy will experience less demand, and this slows everything down a little bit as a result. Unfortunately, or fortunately, depending on how you look at it, this means that the stock market may continue to struggle to produce good returns, at least in the short term. That is, until the Fed decides to pivot. And this is something that everyone is kind of waiting for. What I mean by pivot is that in the past, anytime the Federal Reserve has raised interest rates, they've usually reached a point where they had to stop and then reverse course and start cutting interest rates again. Oftentimes, this pivot occurred because the economy ran into some trouble and they needed to cut interest rates to try and stimulate demand in the economy again. But in our current case, the Fed is the one who is actively trying to slow the economy. So it remains to be seen when and even if they will pivot and go back to cutting interest rates again. But if they do, historically speaking, anytime the Federal Reserve did cut interest rates or announce that they're intending on doing so, the market seemed to rally pretty hard. This happened in 2019 as well as in 2020 most recently. Personally though, if I were to give my kind of 2 cents on things, I hope this reversal doesn't happen too soon because first of all, I think that reining in inflation to help the bottom half of society is absolutely the right thing to do. And secondly, because I'm fortunate enough to be young, market downturns are actually a really good thing for somebody like me because it means that I can invest my money at lower and lower prices. So I'm personally viewing this everything crash as a great opportunity. What are you viewing it as? Let me know in the comments down below. I hope this video helped give you a big picture idea of what's going on in the economy and why everything is crashing all at once. And if it did, please toss this video a like and go ahead and subscribe if you want to be able to navigate all of this together. Thanks for watching. See you again soon.